Is the world's reserve currency, the US dollar, facing a crisis of confidence? President Trump's recent trade policies have sent shockwaves through financial markets, and the dollar's unusual behavior is raising serious concerns. Traditionally, the US dollar gains value during times of financial turmoil, acting as a safe haven for investors. However, since Trump's Liberation Day tariff announcement on April 2nd, the dollar has been on a downward trajectory, even as US stock markets have largely recovered. Deutsche Bank analysts have warned that the world is facing a dollar confidence crisis, as the repercussions of these policies continue to reverberate. Trump's decision to impose tariffs on imports from numerous countries has dented confidence in the U.S. economy, leading to a sell-off of U.S. financial assets, including U.S. treasuries. While Trump announced a 90-day pause on tariffs, excluding China, on April 9th, investors remain wary of holding dollar-linked assets. So far in April, the dollar has fallen by 3% relative to a basket of other currencies, reaching its lowest level in 3 years. This compounds an almost 10% slide since the start of 2025. Karsten Junius, chief economist at Bank J. Safra Sarasin, notes that investors have been selling U.S. assets due to a loss of trust in U.S. economic policymaking. For the past 80 years, the U.S. dollar has been the world's primary reserve currency, a status it gained due to the world wars and solidified when Richard Nixon delinked it from gold in 1971. Even though the U.S. accounts for only a quarter of global GDP, the dollar dominates in trade and finance. 54% of world exports are denominated in dollars. About 60% of all bank deposits are in dollars. Nearly 70% of international bonds are quoted in U.S. currency. 57% of the world's foreign currency reserves are held in dollars. The dollar's reserve status relies on confidence in the U.S. economy, financial markets, and legal system. Experts argue that Trump's policies are undermining this confidence. Foreigners hold trillions in U.S. equities, treasuries, and corporate bonds. If these investors begin to trim their positions, the dollar's value could face sustained pressure. Some argue that a lower dollar could benefit the U.S. by making exports cheaper and reducing trade deficits. Stephen Myron, chair of Trump's Council of Economic Advisors, believes the dollar's overvaluation burdens U.S. firms. However, a lower dollar would also make imports more expensive, potentially hurting consumers and increasing inflation. While most experts believe the dollar will remain dominant for now, Trump's policies are weakening its foundations. The euro and the Swiss franc are seen as potential beneficiaries. Jose Antonio Ocampo suggests that if the EU achieves closer fiscal union and financial market integration, the euro could eventually challenge the dollar's dominance. Is the dollar's reign coming to an end? Trump's policies are certainly putting it to the test. What do you think? Share your thoughts in the comments below, and don't forget to like and subscribe for more economic analysis.